So you want to grow your Forex account. Forex account growth. I've put together some key points here that I believe will help contribute towards your growth. So please do take these in. Obviously, there are a lot more to consider, but just some main points from my own observations, okay? First point, this has got to be number one. Risk and money management. You've got to have a plan. You've got to know how much you're going to be risking in the market. Obviously, look, the guidelines are 1 to 2%, and they're 1 to 2% for a reason, because anything more, you've got to remember that you need to be accounting for times of losing, losing streaks. If you lose 1, 2, 3 trades, that's not going to have a massive impact on your trading capital. Whereas if you're risking like 5%, a few bad trades, and that's a quarter or a half, or if not, boom, all of your account gone, okay? No, not just obviously how much you're gonna be risking per trade, but how much are you able to tolerate in terms of risk of your capital in the markets, right? Whether it's 1 to 2% or potentially maybe lower, 0.75 or 0.5%, entirely up to you. Once you place that trade, you need to feel comfortable, okay? You need to not feel that sense of anxiety once you've placed a trade. Oh my goodness, no, it's going down, draw down, let me close out. And then, all of these emotions overload your brain and skew potentially the good analysis that you've done, because you've just jumped out of the trade because you panicked, because you're in drawdown of 10, 15 pips, whatever the case may be. There's a lot more I could dive into this, but I'm going to go on to the next stage, discipline. If you do not have any discipline, for example, knowing you've got a trading plan, right? You know the times of day you're going to trade. You know what suits your strategy. You know which pairs, crosses, or one particular instrument that you want to trade, yeah? And you're not going outside of these couple of rules. You know, for example, not to trade during news events. It scatters and skews, your trading ability or, your performance. You know not to trade when it's quiet. So all of these things, discipline. So set those out and be regimented. With trading, you have to be well and truly regimented, okay? Trading with funds you can afford to lose, as I said before about emotion and feeling comfortable with what you can tolerate with risk in the market. Because guys, I've said it time and time again, without sounding like a broken record, be prepared to lose, okay? Be prepared to lose. You're not always gonna win, and you've got to be able to deal with that, okay? If you're not, find something else, okay? Assess risk and reward ratios before trading. The amount of people that jump into a trade and they haven't assessed the risk to reward, what the risk to reward is on that trade. Yes, there could be a nice bit of upside that you're looking at. You're thinking about reward, but you got to think about the risk as well. You could see a decent reward, but the risk heavily outweighs that little reward there. So keep that in your mind as well, because the reason why that's important, for example, you may place a couple of trades, yeah, that have gone against you, but this one trade has gone in your favor. Guess why? Because you've had a decent risk to reward ratio on it, and so that will put you net up on the week or the month, whatever the case may be. Again, it comes down to your own trading strategy, but keep that in mind as well. Good risk to reward ratios to factor in that, at the end of the day, not every trade's going to win, but this one, the third one or the fourth one, might prove to put you in that profit. Next, sustainable position size. Guys, if you've got $500 trading account or $200, whatever the case may be, excuse me, don't be trading 1-2 lots, okay? Don't be maxing out leverages, because that's not sustainable, right? You know that's not sustainable business, okay? And yes, this is business. This is your business, Forex trading, baby, okay? And lastly, exit strategy before you enter. Don't just enter and not know where you're going to be exiting, okay? Because that comes down to, again, assessing risk to reward. Yes, you might see, oh yeah, I'm going to be, I'm jumping in, I've got a great entry here, but you don't know where you're going to be exiting, okay? So look, there's a lot more to it, guys, but these are the sort of things you need to consider if you do want that Forex account growth. Something I'm going to go into detail at a later date is about compounding as well, because I've left that out of here, but I want you to think about these things first of all, and then we're going to go into compounding on another video. Baby, let's get it.